Hey guys, welcome in this new video. I hope that all of you are doing great. So in this video, we're going to talk about how to actually become a professional trader and how to distance yourself away from the average retail trader. So as you guys know, well, 90% of retail traders lose money. That's number one. And then in the other 10%, so the retail traders who don't lose money, well, it also includes all the people who don't really make money, who are more, let's say, around break even. So in reality, if you look at the world of retail trading, very few individuals actually make money. So you need to understand this, and then you need to look at what makes the difference between a professional trader and a retail trader, and then you need to act more like a professional if you want to become successful, right? All of this is very common sense, and you might be thinking, why are you once again repeating this to me, Anthony? Well, it's because I still see the same mistakes every day. I still see people doing the same things that don't work every day, expecting different results. This is what we call insanity, by the way, guys. This is what Einstein said, right? And he was right. If you do something over and over and over again, so the same thing, but you expect different results, that doesn't make any sense. So you might be insane, right? So it's always important to take a step back in your trading or just in your life, and then try to understand what's actually happening. Try to understand what's going on and try to understand how can you better the situation. So this is what we will talk about in this video. So I hope you guys are excited for this topic. It's a really important one. So just before that we start, as always guys, don't forget to leave a like under the video. I would really appreciate it, and make sure that you are subscribed to the channel if it's not already done. So let's talk about the differences between retail traders and professional traders. Now, I'm not going to give you guys all the answers, okay? Don't expect me to give you guys all the answers or to spoon feed you, right? I'm not your mother. This is a free video on YouTube. I cover all of this in the course in much more details, obviously. But here on YouTube, I'm going to give you guys a few points, and then I'm going to give you guys a roadmap that you can follow and questions that you can ask yourself in order to become better and in order to get some answers as well, right? But I want you guys to do the work by yourself. Most people always expect others to give them everything, but that's not how I work, and that's not how I want this YouTube channel to be. My goal with this YouTube channel is to share with you guys my experience, my knowledge, and most importantly, pass this on to you guys, right? I love to share what I know. I love to give back value. So this is what I'm trying to do. But the best way that I believe that you can learn something and really apply it is for you to actually learn it by yourself. And so I'm going to try to help you to do this in this video, right? So first of all, if we, look at the structure of a hedge fund, for example, right? Or an investment bank, whatever, right? But let's just stick to the hedge fund because it's the closest thing that there is to actually a retail trader. Now, essentially, what is a hedge fund? Well, it's just a trader, one person that started the hedge fund, right? Or a group of person, whatever. They had a certain capital, and then they went to outside investors to get more money, and then they trade this money. But essentially what they're actually doing on markets, it's pretty much the same thing as just a classic retail trader, right? The goal at the end of the day, well, is to make money, right? It's really just that basic. Your goal as a retail trader is to make money, and hedge funds have the same goals. So both of you are operating on the same market with the same goals. Now the difference is the knowledge, right? Retail traders think that they know what they're doing, but they really have no idea, and hedge funds actually know what they're doing, which is why over the long term, well, institutions and big firms have been more profitable than the average retail trader. And so you basically have different level of knowledge. So the lowest level is unconscious incompetence, right? So you don't even know that you don't know. Or in other words, you might think that you know something, but you really don't. So that's the first level. That's really the basic stage of where everyone starts. But the sad truth is that most people stay on this level. Then you have conscious incompetence, right? So the second stage is that you are aware that you don't know how something works. And so you will seek out information to better yourself. And I guess that this is what most of you guys are doing by watching this video, right? Then you have conscious competence. So you are starting to, get a sense of how things work, and you are, getting better into your trading. And then you have unconscious competence. So you are so good at what you're doing that it becomes almost second nature. And so that's the goal of where most of you guys should be, right? And where you would want to aim if you want to be a professional trader. This is where all the hedge funds are, and most retail traders are at the first or maybe second stage into their career, and that is the reason why they lose money and why hedge funds make money. Now, if we come back to what I was talking before, which is the structure of a hedge fund or a big firm, whatever. Well, as I said, it's the goal, first of all, is essentially the same, right? Now, the structure obviously is different. So they have office, they have employees and things like that. But that's even beside the point, because at the end of the day, what makes money, it's the trades that are being put on the market, right? So whether that you are, a solo retail trader or a big hedge funds with employees, I mean, the way that you make money is the same. So what you have to understand is that the process that they follow, you can also follow the same process because you both trades on the same market. And so now you need to then understand what makes the difference between a hedge fund. So how do they operate on markets? And then how retail traders operate on the market. And so as I said at the beginning of the video, I'm going now to give you guys a few examples just so that you understand basically a few differences, and then you will have a path that you can follow on your own to try to better yourself. So, the most obvious thing that comes to my mind right now is how, the amount of trades, for example, that a hedge fund will have at one given time versus a retail trader. So that's one of the biggest difference I've ever seen. If you look at retail traders, right? How many trades do they hold on average to? Maybe one, maybe two, right? Maybe three, and that's pretty much the maximum, right? And so these 1, 2, or 3 positions will be on the same market, and it's not really going to be diversified, right? So they will have a buy on Euro USD on the 1 hour chart. They will have a sell on USD Yen on the 4 hour chart, and they will have a buy on AUD USD on the 15 minutes, right? If you look at the average retail trader account, that's basically what you will see, right? So maybe 1, 2, 3, right? So a few different positions, but most of the time it's even just one, always on the same market, the same low time frames, right? Do you really think that's how hedge funds work? Well, of course not, right? Are you kidding me? Why would they have all the risk, right, on one trade? Or why would they only hold one trade? I mean, you have thousands of markets that you can trade. Do you really think that there's only one market at one given time which has a good opportunity? Of course not, right? So if you look at, these hedge funds, I mean, they will have so many different positions, right? They will have tens of positions across multiple markets. They will have trades in forex and commodities and equities, in rates, right? They will have trades everywhere, all across the board, because they have a main view, right? Creating a global macro picture. This is what I talk about in another video. And then based on that view, they can take multiple positions, long, short, whatever, on different markets. But that's one of the main difference that there is between a retail trader and a hedge fund. Most retail traders have all their money into a very small amount of trades on the same market, most of the time in the same direction. It's not diversified, and they always get in a new trade, and they close the trade, then they take another one, they close the trade, right? So they don't build a portfolio, they don't build a trading account, they just take trades here and there when they see a short-term opportunities. And so this leads me to another point that is really important and a massive difference as well. It's just the time horizon, right? So retail traders are operating most of the time on short time frames. So the 5-minute charts, the 15-minute chart, maybe the 1 hour, maybe the 4 hour. And usually when they take a trade, they will keep the trade for a few hours, maybe a few days, right? That's really the average. And then hedge funds, again, it's the total opposite. They stay on higher time frames, so monthly, weekly, daily chart, and when they take a trade, they hold the trade for at least a couple of weeks, and most of the time it's even a couple of months. So again, that's a massive difference, right? Another difference, well, it's obviously just the way of how they do select their trades, right? So if you look at most retail traders, right, what's the main reason for them to take a trade? It's obviously technical analysis, right? So they go on the chart, they place so many different lines and rectangles and so many different fancy tools like that on the chart all over the place, and then they think that with these tools they will be able to take trades and position themselves in the right direction of the market. Now the problem with those basic technical tools is that everyone knows about that, right? You don't have any edge on the market. You don't have any tool that can really help you to make a better decision, because everyone is already looking at the same thing as you are, right? So just a classic support resistance or whatever, right? Like, it's so basic, it's so common that everyone is already looking at that. So you don't get anything more from that because everyone looks at the same thing as you. So you need to kind of go a step further into the analysis process. And so what does that mean? Well, that means that you need to implement fundamentals, which will come before the technical analysis part. So once you have a global macro picture of the world, then you can have a fundamental bias for a certain currency, for example. So you think that the AUD currency will go up. So then you try to match it to a currency that you think that it will go down. So you do a very deep and long-term fundamental analysis. This gives you a trade idea, and then you can use technicals if you want to position yourself in the direction of this fundamental idea. But the point is that you don't start with technical analysis, right? Technical analysis is not a magic trick. It's not going to do a miracle for you, right? Because all the other traders, all the other retail traders, are also using the same thing as you. So if you do this, you're just another average retail trader, right? So again, it's always about going a step further and looking at the differences between a pro and a average trader. And yeah, that's kind of the idea. So once you understand this difference as well in terms of the process, you realize that, yeah, retail trader is just someone most of the time that will look at the technicals, and then you have hedge funds who will follow a systematic process, starting with fundamentals, then the technicals, then the price action, then the risk management, and so on and so forth, right? So those are three main differences that I just gave you guys. So number one, the amount of positions in the account themselves. Number two, well, so all of this, right, includes the diversification and things like that. Then you have the time horizon of taking the trades, and then you have what we just explained, right? So you have these three as three main differences. Now, as I said before at the beginning of the video, there are so many other differences, obviously, right? But you guys need to figure either this out by yourself, or you need to also get personal help to help you do this and to save you time. But you're not going to, become a professional trader by just acting like a retail trader. And I guess that it was really the point of this video, understanding the differences, right, between these two levels, and then trying to get on the professional side of the game, right? Because at the end of the day, if you're not a professional in this game of trading, you're not going to make money. I don't care what anyone tells you. I don't care what other, educators or other mentors, right, as they call themselves online, want you to believe. That's not the truth. If you're not a professional, if you don't know your shit at 100%, you're not going to make money long-term in trading, because the competition is just way too big, right? So become a professional. Don't be lazy. Learn the differences between what makes a good trader and not a good trader, and just go do it, right? All of you guys who are watching this video right now, you all have the potential. You can all reach this goal if you actually give yourself the permission to do this by working hard and having the dedication to get to this level, right? So I hope that you guys learned something from this video. I hope that it also kind of opens your eyes to a bit more of the truth of this industry, because it's really important to understand that. So if that helped you, don't hesitate to leave a like. As I said, you can share the video if you want. And on that, I will let you guys go on and practice, right? So on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye-bye.